Good morning, everyone. August the 13th, 2015, we come into another trading day. This is a Newsday trade, retail sales, plus 0.5%. That's a strong number. Could come in lower than forecast. X autos, plus 0.4. X autos and gas, plus 0.4. Import prices, minus 1%. Export prices, minus 0.3. You can see right there that our export prices are less competitive than they were the preceding month. Bloomberg Comfort Index, no one will pay any attention to that. Business inventories, plus 0.3. And natural gas inventories, plus 47 BCF. This is the focus, retail sales, X autos. Then we move to the 30-year auction. And to move this paper, the dealers can't have a down auction unless there's a major piece of news, and that major piece of news could come right there. These numbers could come in lower than forecast given the recent macroeconomic news. So we have support, looks like at 20 to 16. So our first buy is 20 to 17, buy one. Very, very aggressive, and we wouldn't be doing this if it weren't for the 30-year auction. And then 9 to 13. On the sell side, you can't take the market straight up or straight down. We're rallying. We are at 23.24. So resistance is at 24 to 28. So our first sell band's 24.28. Then 31 to 03. But the way the game is usually played, 3-year, 2-year auction up, 5-year, 10-year auction down, 30-year and 7-year auction sideways, then up into the auction. Okay, overnight, China devalued for the third time. You'll see in the A period, the initial reaction was what it's always been. Risk-off investments rallied. Then China came out and said, "Hey, don't worry about this. We're going to support the currency and our stock market." And then risk-on investments were back in as traders piled in. Short covering was certainly part of it. The short covering came in the United States yesterday. We started that rally, that idea, and after the spikes in A period, when the currency was once again devalued, traders poured back in off the Chinese statements and off to the races. Equities were back in favor. In fact, the only stock market that did not rally was France's. And the other day when the markets were selling, France's market happened to rally. So they're a bit out of step with the rest of the world. Okay, bonds 7 to 11. It's where resistance is. It's the top of value. You can see that R high, S high right there. Then you got the breakout from 16. So let's just sell one. And then we'll open it up 19 to 23 for sell 2. On the buy side, 21.25. And then we've got this rally up through 12, so we'll make 9 to 13 for buy 2. Gold had a similar reaction as treasuries did. And you know, this is a fabulous environment for traders. I mean, we just we get the news. You can see the A period high right there. Did not rally as much. We had a sell in the 24, 26 area. Caught that pretty well. And now the market, go the longest line of letters and left click. That's how I split the distribution. Shouldn't be any questions about that. I could also, if I put this into there, I could split on B. But right now the market is pointed lower. Last rotate down yesterday in London was 14, 14 and a half. So our first buy is 15 to 13. It's where support is. That's the area we have to pay attention to if we get our setup. And then got volume at 8. So we'll come in 9 to 11. We'll come in just right on top of that high volume number. So basically we got support in the 10 area, plus or minus. Okay, the sell, 19 to 21. That's where we were yesterday. 24 to 26. So we'll keep the same numbers that we had pretty much yesterday. Okay, the euro was sold overnight. And again, the central bank wants it that way. So here's the news spike off China. China comes back in and says, "Hey, we're not let the bottom fall out of our currency market. Currency war? Are you kidding me?" You know, when a government, it's just pretty much a standard rule. If a government says it's this way, it's probably not. It's probably so. Here's China. We're not doing a currency war. We're not trying to protect our export market. It's just a normal revaluation right here. We'll take care of it. We'll manage it. The bottom won't fall out of the market. Right. So here's our 75. Obviously, we have to get through the buck. So 111 to 1075, buy 1. Buy 2. And on the sell side, 50, sell 1, plus or minus 75, sell 2. Okay, I get a lot of our news source. Most of the articles I post come from Zero Hedge, and the reason I do that, it is the most pessimistic news source out there. If you blindly follow the tone and the majority of the articles that Zero Hedge puts up, you'd be short equities, and you've been short equities since March of 2009, and you would have left a lot of money on the table. But in taking a hard look at what the numbers really are, finding any discrepancies in reports, there isn't a better source than that. And that's why we use them. But just because Zero Hedge puts a bearish article up there sure as hell doesn't mean that it's going to happen. And you have to keep that in mind. You look at all news sources, you look at raw data, you look at it real time, you put it all together, and you keep things in context that way. Now if I do an S split right here, you can see that we're looking at a pretty solid B, and volume is below time, so we like the short side of the market. And I do believe they're headed for stops below 42.40. Now if we get down and 42.42 holds, 42.50 holds, and we can't take it out, and the market starts to rally, we've tested chart lows, and they've held, so somebody's going to cover their shorts. So we're still waiting for our test of 42.50. Coming in right above that, we're going to put a 42.50, 42.75 buy. That's where support is. And if they can't take 42.42 from support to resistance, we're going to get some short covering. And then we're going to make 41.75, 42 by 2. We like the short side of the market. Iran supposedly is putting 45 projects up for bid to increase their crude production. These guys, the deal that we are pushing, that probably will pass. I mean, it just couldn't be any better for Iran. They get money, they get cash flow, they have the rights. No one can inspect what they're doing. They've got all their frozen assets are released, so they've got cash flow to keep doing what they're going to do. It will not increase freedom and prosperity in Iran. It will increase the sources or the funding for all their terrorist operations, all their military excursions around the world. The neat thing about it is they're just as bad, their general and their leaderships are just as bad as the others on that part of the world. And when you look at how the Iranian-backed, the Shia military operations go, very, very high casualties. Remember when Iran used to give kids magic trinkets and have them walk through minefields to explode the mines by stepping on them? It's the same mindset. It's just human life is not part of their equation. Death is, and they're not going to change, and that doesn't bring quality thinking about how we can assault this or take this territory back. They just mass a bunch of people and they send them forward. So their tactics aren't going to change, and they've got 100 depending on to 150 billion, depending on whose reports you believe, of new cash flow, unfrozen assets coming their way. Pretty nice. Okay, 2100, 2110 is where resistance is right now. We're within striking distance of it. First we got to get through 95. So stops above the overnight session high is what we'd expect this market to do. So our first sell band is 89 to 91. It's where resistance is. That's sell 1. Then 94, 96 will be sell 2. I think resistance at 2100 is going to hold. So 95 to 2100 is best resistance, and there's a chance it's at 90. Right now it's at 90 plus or minus. On the support side, 80, 82. We'll put a question mark at 85, and then our 75, 77. And Goldman's stock buyback desk was the busiest they've been in a long time yesterday, as corporations came in and bought their stocks. Why are corporations buying their stocks? Why are major corporations eliminating white-collar jobs as fast as they can? To protect executive compensation. Just think about if political hysteria had not imposed a $1 million per year salary for corporate executives. They weren't going to be paid any less. They were just going to get paid through a different vehicle, and that was called stock options. And if the stock price goes up, these guys' compensation goes up. So they will borrow money, they'll raid their pension funds, they will do everything to make sure their compensation goes up. And that's what's happening right now. So who's the biggest buyer? The Fed's been the biggest buyer of stocks up until this year. The biggest buyer of stocks, the long side of the market, are corporate buybacks. And that's probably not going to change. It's another great example of the law of unintended consequences and passing rules and laws based on mass crowd psychology and hysteria. That's all I have right now. It's going to take a bit to get everything up and posted. I'm going to get busy on it. Be back with you as soon as possible.